Welcome, curious minds, to another deep dive into the dynamic world of blockchain technology. Today we're dissecting a really fascinating project, Klever Coin, or KLV. And this isn't just about, reviewing a single token. It's more like a case study for these smaller layer 1 chains. The big question we're asking is whether Klever is truly making that leap from, say, a speculative asset to a utility-driven ecosystem, or if it risks becoming just another ambitious regional experiment.
That's exactly right. Our mission today is to really unpack Klever's ambitious roadmap, look at its technical foundations, and crucially, its real-world market performance. We'll be drawing heavily from a pretty comprehensive analysis by Blockura, but also bringing in other insights. The goal is to get a nuanced understanding, much like how tech journalists, maybe at The Verge or MIT Technology Review, might approach an emerging innovation. We really want to get beyond the surface claims and see what's actually driving it or maybe what's holding it back.
Yeah, exactly. And for you, the learner listening in, the core question we're exploring is, what does it truly take for a smaller blockchain project to make it, to attract genuine real-world utility in today's incredibly crowded crypto landscape? Okay, so to really understand what it takes, let's first look at Klever's current market performance. Because on the surface, it's seen some recent rallies, right? Even clocking over 20% gains in the last 30 days. That sounds pretty promising. But as Blockura highlights, there's a critical catch here. Potential isn't performance.
That's a key point. And what's fascinating here is how quickly those gains can, evaporate. It reveals this underlying fragility. The numbers themselves are quite telling, actually. We're talking about a 2.1% pullback in just a single day, followed by a really significant 59% drop in trading volume within 24 hours. That's huge. And when you couple that with a very low turnover ratio, just 0.0984, these aren't just, dry statistics. These are, as Blockura aptly puts it, kind of red flags, especially for attracting serious institutional liquidity and, maybe more importantly, consistent developer commitment.
Red flags how, exactly? For institutions or developers?
Well, for institutions, think about it. They need deep markets. They need to be able to enter and exit large positions without drastically moving the price. These numbers suggest that depth simply isn't there yet. It's too risky for them. And for developers, thin trading volume often signals low user activity. Why build dApps if few people are likely to use them?
Right, that makes sense. And while those recent gains are noteworthy, the long-term view for KLV tells a slightly different story. It's still down 17% over the past year. Plus, we have to consider the broader macro environment. Bitcoin dominance is rising, recently hit 60.58%, and the altcoin season index is retreating to 42. What does that mean practically?
Well, rising Bitcoin dominance means more capital is flowing into Bitcoin, generally away from altcoins like Klever. And an altcoin season index below 75 signals that altcoins as a whole are underperforming Bitcoin. So the broader market tide isn't exactly lifting Klever's boat right now.
Okay. And technically, are the charts telling us anything?
Yeah, if we look at the technical indicators, KLV is really struggling to breach that 23.6% Fibonacci resistance level at 0.002387. That's a key technical threshold, basically a price point where selling pressure has historically kicked in and stopped upward movement. And momentum indicators like MACD and RSI, which help gauge trend strength and direction, well, they offer very little conviction right now. It really reinforces that the market is in a distinct wait-and-see mode when it comes to Klever Coin, which naturally raises an important question. How does a project build true, sustainable momentum against such significant market headwinds?
So given these headwinds, this whole wait-and-see mode, what is Klever's strategy then? How do they plan to move beyond just speculation and build that sustainable momentum you mentioned? Where do the promise lie?
Okay, well, this brings us to where Klever does actually show considerable promise. They have what Blockura describes as a layered strategy, and it seems to go far beyond just hype. They're targeting adoption through a multi-pronged approach, focusing on education, providing robust developer tooling, and making significant architectural upgrades.
And a really unique part of that seems to be their bet on Brazil as a launchpad. That sounds interesting.
It is interesting, yeah. The Klever Academy, which officially launched on July 23, 2025, is kind of their wedge for developer adoption. They've already completed pilot programs with Brazilian universities, including Unifor, and they have this ambitious goal to onboard over 1,000 new developers just within that region. It's a fascinating strategy, really, aiming to cultivate a strong local base in what's often considered an underrepresented market in global tech.
Okay, but Blockura adds a critical note here, right?
Yeah.
While focusing on a region like Brazil could build localized strength, they say converting education into real on-chain dApp activity is a steep hill.
And it truly is a steep hill. Look, fostering a thriving developer community isn't just about teaching people to code. It's about providing the robust infrastructure, accessible funding, clear pathways to user adoption. That's particularly challenging in newer markets, even if you have strong local partnerships. We've seen many layer ones struggle with exactly this transition, so it's definitely a critical area to watch for Klever.
Makes sense. Okay, so beyond building the developer base, they're also working on the token itself. Let's talk about their token supply discipline and those planned burns. They have an automated burn mechanism already running.
Yeah, it's already eliminated something like 94 million KLV. The idea is to create deflationary pressure over time. And the CEO, Bruno Baiano Campos, he's hinted at a large future burn, specifically of validator rewards once the blockchain is fully open sourced. Plus, the team has apparently been doing silent buybacks during market dips, buying up their own token without much fanfare.
Okay, so reducing supply, that sounds positive for token holders.
They are positive steps, yes. Managing token supply, signaling long-term commitment, that's good. However, Blockera does point out that without sustained organic demand from actual users and developers building things, even these deflationary mechanics might offer only limited relief for the token's value. Think of it like this. It's a good foundational piece, sure, but it really needs an active, growing ecosystem on top to truly make a difference long term.
Right, the demand side of the equation. And a major piece of that puzzle, especially for attracting developers and real utility, has to be their KVM, the Klever Virtual Machine, and how it tackles this interoperability challenge. Blockero says the KVM is described internally as the gateway to DApp activity.
Absolutely. It's probably the most anticipated piece in Klever's entire roadmap right now. It's expected to hit mainnet in Q3 2025, bringing EVM-like functionality.
And why is EVM-like functionality such a big deal?
Oh, it's huge. Because it means existing decentralized applications, or dApps, and the tools built for Ethereum, which is still the dominant smart contract platform by far, can be easily adapted or just deployed directly onto Klever. It dramatically lowers the barrier to entry for new projects and existing developer talent. It's almost table stakes now for any aspiring layer one that wants serious developer adoption.
Gotcha. And it seems they're really pushing hard on the cross-chain side, too. The Ethereum bridge is already live on testnet, aiming for mainnet in Q3 2025. And then Tion and Solana bridges are set to follow in Q3 and Q4. That's quite ambitious timing. Plus, the whole Klever blockchain will be fully open-sourced by Q4 2025. That feels like a necessary step for legitimacy, doesn't it?
Absolutely. Open sourcing is crucial for transparency and trust in the decentralized space. And yeah, their long-term roadmap even stretches into 2027. They're talking about layer 2 solutions, things that usually aim to improve scalability and reduce transaction costs, decentralized DNS, even Ethereum RPC compatibility down the line.
Wow. Okay, so if you connect all those dots...
If we look at that comprehensive roadmap, yeah, it's clear Klever is aiming to build essentially everything a modern blockchain needs, at least on paper. The sheer breadth of these planned features, the KVM, the multi-chain bridges, open sourcing, future layer 2s, it demonstrates a really strong vision. They want a robust, interconnected ecosystem. But the crucial question, of course, isn't just about the vision on paper, it's always about execution.
Speaking of execution and building trust, let's touch on security as a credential. The CertiK factor. The Klever Wallet Operating System, KOS, that got certified by CertiK in mid-2025 after a deep audit. Right? Verifying things like private key protection, transaction signing, mnemonic safety, the core security stuff, and crucially, the entire Klever blockchain itself is now undergoing its final CertiK review. Blockera highlights this as a precondition for potential listings on Tier 1 exchanges like Binance. That sounds pretty significant.
It is significant, definitely. That kind of audit builds foundational trust. But what's fascinating here, and Blockera makes this point too, is that while this diligence is absolutely important, certification alone won't bring liquidity or user activity. Think of it like a brand new car getting a perfect safety rating. It's crucial, right? It builds confidence. But it doesn't guarantee people will actually buy the car if it doesn't perform well, or offer the right features, or serve a real need they have. Security is foundational, absolutely essential, but it's the ecosystem adoption that drives the real utility and demand.
Okay, so security is necessary but not sufficient. Beyond the core tech and audits, how are they planning to attract more actual users then? They seem to be focusing on improving the wallet experience and their overall branding playbook. For instance, they integrated the Lightning Network for iOS users back in May 2025, allowing near-instant, low-fee Bitcoin payments with Android support apparently coming soon.
Yeah, and they're also simplifying the overall wallet experience itself, offering options to abstract seed phrases for people new to Web3, make it less intimidating, while still maintaining that crucial non-custodial control, meaning users always hold their own keys. Plus, there was that notable rebrand of their exchange name from Klever to Bitcoin.me. That seems like a strategic move, probably aimed at compliance, but also just better search visibility, tapping into the Bitcoin brand recognition.
So making it easier, more familiar.
Exactly. These updates suggest a very clear push toward more mainstream crypto users, not just to hardcore developers or the very early adopters. By making the user experience simpler and the brand perhaps more accessible, they're positioning themselves for potentially broader adoption.
Okay, and one last piece. Their institutional strategy. Playing the long game, as Blockaroro puts it. CEO Campos has a fairly cautious approach to venture capital, prioritizing alignment over just grabbing any money offered.
Right, they're not just chasing funds for the sake of having a bigger war chest. They seem selective, and instead, Clever is engaging strategically, particularly in Brazil. They've received invitations to roundtables with major players like Mercado Livre and top banks there, which really signals a clear bid to become potentially a core blockchain infrastructure layer to these established institutions.
Interesting. So trying to build from the ground up with big local partners.
Yeah, this compliance-first approach, combined with direct engagement with established financial players, that could become a significant differentiator for Klever Coin in what is, let's face it, a very crowded market. It feels like a smart long-term play, especially given how quickly the regulatory landscape is evolving. However, Blockror rightly notes that's a big if. Integrating deeply with traditional finance is notoriously challenging.
Okay, so we've unpacked a lot. The tech, the strategy, the market. Which brings us back to that central question posed by Blockror. The blockchain world is absolutely brimming with brilliant roadmaps, tons of great ideas. But what ultimately separates the winners from, well, the rest is execution.
Exactly. Clever's undeniable edge, I think, lies in its clear commitment to security shown by the CertiK audits. Also, its unique, regionally focused developer growth strategy in Brazil, and its aim for low-cost infrastructure. However, this raises the important question, what are the major risks that still remain, particularly when we talk about actually executing on all this?
Right. What are the big hurdles?
Well, first, liquidity remains quite thin, as we discussed earlier. That makes the token vulnerable to large sell-offs, volatile price swings. It hinders institutional adoption. Second, developer activity, while growing perhaps, is still low compared to the established Layer 1 incumbents. The ecosystem isn't yet attracting that critical mass needed for really robust dApp development and network effects. And finally, that Brazil-first strategy. While unique and potentially effective locally, Blockror notes it may limit global scalability unless successfully expanded to other regions. And scaling that model globally is a significant hurdle.
So it really feels like a critical period ahead for them. The coming quarters, especially Q3 2025 with the KVM launch, seem absolutely crucial. If the KVM launch and those cross-chain bridges and the full certifications, if they truly converge to unlock significant developer traction and boost trading volumes, then Klever really could graduate from a promising underdog to a serious Layer 1 contender.
Conversely, though, if those key milestones slip, maybe the tech isn't quite ready, or if adoption lags despite the ambitious roadmap, then Klever does risk becoming, unfortunately, yet another blockchain with great ideas and no one building on them. It's genuinely a race against time for them now, and ultimately it's a test of their execution capabilities and whether their unique regional strategy can overcome the inherent challenges that face pretty much all emerging Layer 1s today.
So wrapping this up, what does all of this mean for you, the learner? Klever Coin presents a really fascinating case study, a blockchain project navigating all the complexities of the current crypto market. Its blend of strategic patience, that unique regional focus, and some very ambitious technical development definitely makes it one to watch closely.
Yeah, the ultimate test for Klever, and really for any aspiring Layer 1 blockchain trying to break through, lies in demonstrating genuine, measurable utility, something that goes beyond purely speculative interest. Can its unique approach starting in Brazil be the blueprint for wider, maybe even global adoption? Or will it remain more of a niche success story? That's really something for you to continue exploring as Klever's journey unfolds in the coming months and years.
Absolutely. Well, thank you for joining us on this deep dive.
And remember, for more in-depth analyses like the Blockror piece we referenced today, you can always find great resources out there.
Thanks for listening to BlockRoar.com.